Hey everyone, welcome back. We've got big news today, big EV news. We're talking about a few different EV companies: NIO, Polestar, Li Automotive, XPEV. This includes so many companies to talk about. We'll even be touching on Apple and Tesla today because they're market leaders on the stock markets. That's without a doubt. We'll also want to talk on Polestar as well. I made a video on Polestar, why the Polestar stock is falling, is it worth buying, all these information. So I've got lots to go through. Now remember, ladies and gents, this video is not financial advice. It's strictly for educational purposes. And let's get this video started. Just hit that subscribe button and enjoy. Now the shares of NIO, XPEV, Li Automotive, Polestar, Leapfrog, these companies have something in common, and that's Chinese ownership. Of course, Polestar is both owned by Geely and by Volvo, but it's definitely been affected heavily. So I want to put some clarification on this. So before we get into the debate, if you can say, it looks like all EV companies are in the red right now. In fact, I've got a list of 31 different EV companies, and not one of these companies are in the green in the last 30 days. So that in itself is quite fascinating. Even Tesla is losing value right now, and they are a huge market leader. NIO is down to $26 billion in valuation and $15.58 per share. Li Automotive is $21.8 billion in value and $23.37. And Polestar is the magic one, ladies and gents. They're down to $10 billion in market cap, and their share price is incredibly cheap at $5.12. Next up is XPEV. They're down $9.9 billion in market cap, less than Polestar, and their share price is $12.11. That's absolutely insane. So as a clarification, the entire market is doing bad right now, not just the Chinese companies. However, we do want to focus on a few Chinese companies in particular, such as NIO and of course Polestar, whom is partially owned by a Chinese company. Now, we also want to touch on Leapmotor. I actually made a video on Leapmotor. They're a fairly new company, so they're quite interesting as well. Now, Leapmotor seemed to have debuted at $6.11 per share, and it fell as much as 41% during intraday trading. As part of the IPO, it raised about $803 million. The proceeds will be used for general corporate purposes and marketing. Now, shares of Leapmotor ultimately finished the first day down at 33%. Adding downward pressure to NIO, XPEV, and Li stocks, and of course, Polestar. Now, shares of the EV companies have also been hampered by supply chains issues, lockdown in China, inflation. Now, with Leapmotor's IPO, investors now have another proxy to gauge the health of the Chinese EV market. That's important to understand. There's different EV markets. There's the European EV markets, which are traditional Mercedes, BMW, Audi, who are now transitioning to EV companies, and Porsche as well. They've gone public today, so good for Porsche. This was the 29th of September, of course. Now in America, you primarily have companies such as Tesla and Rivian and other American EV companies that are starting to do their thing. So different regions do have different companies. Let's get that out the way. But all these companies are being affected. Rivian, Tesla, can you believe it? Rivian and Tesla are the biggest EV companies by market cap. And Rivian has barely sold 10,000 vehicles. But what you must understand is that it's not just the EV market. You take a look at Apple shares, they've been losing value in the last month as well. Starting out the month, Apple shares were actually doing relatively okay at $163 at its highest point on the 12th of September. But coming towards the end of September now, ending Q3 of the year, going into Q4, Apple shares are down to $142. So it's not just EV companies. The entire market is having a downward swing right now. A good stock to always keep track of if you're wondering if the entire economy is going down, if the entire stock market is underperforming, is the S&P 500, of course. S&P 500 always helps you to understand this. They're also losing value. If the S&P 500 is losing value and EV stocks are losing value, it is not EV stocks' fault. It's the entire market that's in red. But more on NIO as a company. In great news for NIO, NIO electric car sales increased by 82% in August 2022. The company started delivery of its fifth electric model, the ES7. This was the fifth EV model from NIO. Now, NIO reported that its overall electric vehicle deliveries in August increased by 82% year over year to 10,677 EVs, which is also a slightly improvement over July. Now, last month, the company sold 7,551 crossover SUVs, up 28% year over year, and they also sold 3,126 sedans. So the overwhelming of NIO's sales in China, although it's late 2021, the company started sales also in Norway with the ES8 model. That's another SUV. Now, the numbers of the individual models were not released, aside from two models. The NIO ET7, those sold 3,126, which is the only sedan in the lineup, and all the NIO ES7 that sold 398, which entered the market in August. These are really incredible numbers from NIO. Consider the point that this is not a European company, it's not an American company, it is a Chinese company, and the cars are currently being built in China. But NIO has shown a strong, ambitious footing in Europe. They want to sell more vehicles in Europe. Of course they do. Who wouldn't want to? But keep in mind, this is not made easy because they're not currently manufacturing vehicles in Europe. All these vehicles being built in China have to be shipped to Europe for sales. This makes logistics even more difficult and costing and daring, especially in times like this when constraints, delivery constraints, manufacturing constraints are so difficult, and NIO is already getting an overwhelming amount of support and pre-orders from China itself. So if NIO is already struggling to keep up with deliveries in China, imagine going out into Europe and also supplying that market when you do not have a factory in Europe as of yet. But I'm quite sure that NIO will have a lot of positive feedback and a lot of great sales coming out of China, but especially in Europe as well. They're quite new to the European market, but I'm sure that them entering the European market so slowly, there's plenty to learn, and they will. There's also plenty to gain. NIO has nothing to lose going into the European market, absolutely nothing. They've only got great things to gain, and with the possibilities that they could build a European factory in the near future, that even gets even more people more confident, as investors seems to want to pile in their money on NIO. I've been keeping a close eye on my favorite company, of course, Polestar. They've been losing a tremendous amount of value, now below 11 billion in market cap. Now it's good for me because I'm just buying more, because the entire market is just cheap right now, so I really appreciate that. NIO is also getting cheaper as well, down to $15 now. That's really incredible. In the last month, NIO has not been this low in price. So if anything, I'm excited. The last time NIO was down this low was back in June and in May as well, earlier this year. So it's an interesting time to see that the market has taken a turn for the worse right about now, just before the end of Q3. I wonder why. What a coincidence. And like I was saying, Tesla was also losing value as well, as you can see for yourself on chart. They're currently $268 per share. Now, actually, in the early parts of September, they were at a similar price, so it shouldn't be too much of a surprise for people. But in the middle of September, they were doing extremely well, up to $312 per share. But given where Tesla were in June, I'd say they're doing pretty well right now, because in June, the stock prices were as low as $209. And that was a great time. That was the end of May and in June as well at $213. So where it is right now is actually pretty damn impressive, considering that the entire market is. But market leaders such as Apple, such as Tesla, they're American company, they're market leaders. You can always get a good representation of where the market is going. Look at Google, for instance. In the last month, they've also been losing value. Now, obviously, there was a stock split for Google, which I must say I'm quite happy about. But as you can see, they've been losing value as well. Even within the last 6 months, they've been losing a tremendous amount of value. At the start of the year in April, Google shares were as high as $143. Right now, they're $98 per share. That's a tremendous amount to lose. That is a tremendous amount to lose. And in the last 5 years, if you look at the chart for Alphabet, for Google, you'll notice that they peaked out around 2021 in October. The question is, can we get back to that part? But that's it for this video. I just wanted to give my honest opinion on why I think the market is having such a difficult time for EV Chinese company. It's not just those company, it's the entire market. So stop panicking. It does happen, and it will keep happening. So that's it for this video. Thank you for watching, and I'll see you in the next one.